Hi, this is James Shug with Westpac London's end of day report for Tuesday, September the 4th. The markets are down again today, the main reason being US data that disappointed. The ISM manufacturing survey for the month of August slipped from 49.8 to 49.6. Now that's not a big fall, but it's the third consecutive reading below 50, indicating contraction in the industrial sector. The last time it dipped below 50 before this most recent period was exactly 4 years ago in the second half of 2008, just as the US economy was heading into recession. So we're getting some signals here that the US economy is slipping away as we enter the second half of 2012. Construction spending figures as well showed a 0.9% fall in July. Now housing in particular has had some good numbers of late, but residential housing was down 1.2%, spending on residential housing. Private non-res was down 0.9%, and the public sector was down again too. So weak construction spending numbers, weak factory survey. Now, some days stock markets like that sort of thing because it means there's a better chance of further policy stimulus. But for whatever reason today, stock markets actually sold off on those weaker US reports. But for me, the bigger piece of news was actually something that was done a little bit sneakily with the European Central Bank's President Mario Draghi speaking behind closed doors to a session of the European Parliament. A recording of part of what he said was leaked, and I'll quote it. If we are to buy long-term bonds, we're in a very delicate situation. But if we go on the short-term part of the market, where bonds have a length of time, a maturity of up to 1 year, 2 year, or even 3 years, these bonds will easily expire. So there is very little monetary financing, if anything at all, that we are doing. Now, effectively what that means is that Draghi is arguing that by buying the shorter dated bonds of governments like Spain and Italy, he's not actually financing those governments because they're only effectively short-term paper. It becomes an issue, he argues, and I presume he's got legal backing for this, at longer maturities like 10 years. So there's that could be one could infer from that he's talking about unsterilised bond purchases, which have considered to be verboten under EU treaties. I mean, let's roll on Thursday so we can find out. Look, the yield on 2-year bonds in Spain, just before Draghi said his whatever it takes comment in late July, were 6.8%. Okay, they're now 3%. Okay, so 2-year bond yields have come down almost 4 percentage points in a month, just on the basis of Draghi saying something in London, Draghi not telling us much at the press conference in early August, and Draghi getting secretly taped in Brussels today. So let's see if he gets what sort of reaction he gets on Thursday. The UK services PMI was released a day early. It was a little bit stronger, second strongest reading for the year, but the construction PMI for the UK was back below 50 again. It's had the weakest run of readings since early 2010, actually, over the last 3 months. And the British Retail Consortium reported a 0.4% decline in annual terms in retail sales in August, suggesting that the Olympics didn't help the retail sector, even if it helped boost the services sector somewhat. Look, that's it in terms of news today. Give you the markets quickly. FTSE in London down 1.5%. The French market down 1.6%. The German market down 1.2%. The Spanish market, not surprisingly, up 0.75%. And the Italian market off 0.3% today. US markets off 0.75%, 0.71% at the moment, below 13,000 again. It's at 12,998 at 5 o'clock in London. Commodity markets, we've got oil 1.3% off today. Copper's up 1/3%, and copper's up 1/3%, yes, and gold's also up 1/3% at $1,693 an ounce. The Aussie dollar, it's been slipping in line with equity markets. It's down to 1.023 against the US dollar at the moment. We've got Aussie GDP numbers coming out on Wednesday. Now, our forecast for the second quarter was 0.8%. We've cut it back to 0.6% following the various partial data that were released over the last couple of days. That's down from 1.3% in the first quarter. So the economy in Australia is still growing, but at a slower pace in the second quarter. And some of the signs for the third quarter, I've got to say, are looking a bit soft too. There's still justification for a rate cut out there. The Reserve Bank doesn't quite see it just yet. Okay, I'll be back with more tomorrow.